Hey everybody, Ron Carruthers here, your main man when it comes to all things college, financial, and tax retirement related. Hold on, make sure I got this thing framed right. And today we are going to be chatting about 8 of the most common mistakes that people make when they're getting ready to file their financial aid paperwork. So, if you guys remember in a previous episode, we chatted about how the March 2nd deadline in California is kind of like the deadline. Hopefully, you guys all filed by then. If you have a senior or returning college student, even if you think you don't qualify. So, today, what we're going to do is chat about the 8 most common mistakes that people make. I don't have any fancy slides to show you guys. However, as a reminder, we got classes coming up where you can learn more about all this stuff. They're going to be awesome. You got to go if you haven't been. So let's talk about the biggest mistakes. Mistake number 1 when it comes to financial aid paperwork for college is not filing at all because you assume you make too much money. We do not want to see that at all. You got to file. Okay. So I don't care if you're CEO of Qualcomm here in San Diego, you need to file. And the reason why is if your circumstances change later, that allows them to turn around and give you financial aid, gets you in the system. And you can qualify for some loans. And most schools, even if you're going to be getting merit money, which has nothing to do with your income, everything to do with your kids' SAT and ACT scores, most schools won't offer it. Not all, but most, if you don't file for financial aid because they're like, oh, well, you don't need it, so we're not going to worry about it. So that's mistake number 1. We want to avoid that at all costs. And if you didn't do it, just get it done. Mistake number 2 is filing late. Now, every school has its own deadline. So certain schools want stuff done in January, and schools are sometimes kind of dicks about this. We had a school for one of our parents this year that has always, for the last several years, had an April 1st deadline. This year, instead of 4/1/2019, these guys switched it to 1/4/2019, January 4th. That's when they wanted their stuff done. Ridiculous. They didn't give anybody a heads up. We just kind of noticed, like, oh, it's late. Are you guys for real? So we'll find them on it. It's not going to really hurt us. But ideally, particularly when it comes to Cal Grant, you don't want to file late. And that means if you're a parent and you're watching this later, or your kid isn't ready to go to school yet, you don't have to file on October 1st when the form goes live. But what you do want to do is file no later than January 31st of your kid's senior year. So occasionally you'll have a school with an earlier deadline than that, but for the most part, that's going to take care of them. So that's your second mistake. Now, the third mistake is kind of a biggie, and this is the one that everybody screws up, and it's not listing your assets correctly. So let me explain what I mean here. If you were going down to the bank and you were going to make a list of all your assets, you'd be listing your jewelry and your cars and your jet skis and your boats and the equity in your home and your IRAs and your 401ks and all that stuff, right? Plus your stocks, your bonds, your rental equity, things like that. Well, if you've been to one of my classes, and if you haven't, there's your link right below. If you've been to one of my classes, what you'll hear me say is, yeah, that's all great, but Congress made these rules, and look at what a hot mess Congress is right now. But they've always been like that. It's not that Congress is getting worse. Well, maybe it is, but it's that through social media and other things, we just see it more. Congress has always been kind of a dysfunctional mess. And so the rules that they created for your FAFSA, which is your free application for federal student aid, which is the form that every school requires. And then some schools require a secondary form called a CSS profile. But they have this weird congressional definition of what should count and what shouldn't count. And guess what? IRAs, home equity, jewelry, 401ks, cash value life insurance, annuities, jet skis, boats, planes, $50,000 watches, Ming vases, Persian rugs that are worth like thousands of dollars. None of that stuff counts. Not one of it. So you wouldn't list any of that, and that's kind of the biggest mistake that everybody makes. Now, again, what I'm talking about is the paperwork piece of this. Understand, there's a whole formula here and whole steps to go through. But back a week ago, I told you guys, just get your paperwork in. We can clean it up later. This is the number one thing that people screw up. When I teach these classes live and I mention all that stuff, invariably couples start elbowing the other couple, giving them the glare. You did that, and look, like everybody does it. The form is a poorly written government form. It's really not your fault, and particularly if you do it online, the directions are pathetic. It's just, and if you're ever so slightly paranoid, and you occasionally look up in the sky and wonder if those are chemtrails and they're poisoning you, or if you skew conspiracy theorists at all, you might think that they do it on purpose, because the colleges are like, hell yeah, screw up the forms. We don't have to give you money. You weren't expecting to get any money anyways. So sucks to be you. Write us a check or take out these loans, when really with a little bit of knowledge, you would have avoided all that. So that's the third mistake. And really the biggest is just listing stuff wrong, like screwed up. So no 401ks, no home equity in your main house, no rental. Well, you do have to list rentals, but if you have that situation, you should probably talk to us, because there's a formula we can use to get you the lowest rental value. So that's that. This chair sucks. I feel sorry for my clients. Anyway, I'm going to get new chairs. So if you come to the office, you'll have a good chair. This chair's terrible. All right. Mistake number 4 is valuing at all or overvaluing a business. So again, back to that bank form. If you're like, you own a business, they want to know what's your business worth. You're going to tell them like, oh, it's worth, millions. When it's you and your dog. The real answer is there is a specific definition, which is if you have 100 or less full-time employees or full-time equivalents, the value of your business is 0. There's no value on it. And the reason is if you stop and think about that, see, that one they got right. Because I run a small business and I don't care what the accountants tell me my business is worth, I got to show up every day. We're not at that point, and generally the theory is by the time you've got 100 full-time employees, you have a real business that kind of runs without you. Now, there's some stuff there. Say you have money over here that would count against you. We can use some of these other rules with planning to fairly, morally, ethically get that money exempted or get that rental property exempted. See, that's where planning comes in. But that's a big mistake. That's mistake number 4, is overvaluing your own business. Now, this one's kind of funny. So hopefully the person that I'm discussing is not watching this. If it is, you know who you are. We still love you, but we had a client who's type A personality. We filled out some forms for. There was one little thing she was unhappy about. We got her a butt-kicking award letter. I will not say anything more than that, but it was money she really wouldn't have gotten on her own. She's kind of like, well, this one thing really upset me. I'm going to do the forms myself. So like, no problem. We'll make a note of that in the file. No big deal. And anyway, Friday rolls around. She gets my email. Is like, I didn't fill it out. Weren't you guys supposed to do that? We're like, no, you came in, you told us not to do it. We didn't bill you for it, but no problem. Just get it done. We'll clean it up later. Now, here's the funny part. She listed her income in her students line, which means the number that they came back and told her she could afford for 1 year for this kid to go to school was 80,000. No, that should never happen. So, and again, the mistake is real simple. It was, and again, this is a smart, professional executive. This is not drive-through clerk who never graduated high school. Like, this is nothing wrong with that. Just this is a smart lady. And yet, again, it's a weird form. And so because she listed the income in the wrong place, it totally jacked up her numbers. Now, no small children are going to die on this deal, all right, because we're going to get it fixed for her. But we're politely reminding her, like, yeah, there's something to this. Maybe you want us to do it next year. Oh, man, federal government, those forms, these guys. My daughter is running a business overseas, and there's some form they want her to fill out for this tiny little business that they've got going. The freaking form itself says this form will take you 38 hours minimum to fill out. 38. And an average of, I think it's 80 hours to complete one form for her tiny little business. It's a mess. Government, man. Now, let me tell you another mistake, number 6. And this just, sadly, this happens with a fair number of our clients. It's not our fault. But if you get divorced or separated before you actually file the form, so they want you to look back 2 years, but now the form is going to be based on the tax year from 2 years ago. So if you're filing this form out right now, you're basing it on 2017. By the way, that's another mistake people make, is they use the wrong year. And so that's a freebie. We're not even going to count that in the 8. And I had a parent, like, I was trying to do this myself and it made no sense. They kept telling me to go back and I kept trying to put the other numbers in. No, they want you to go back 2 years, but a lot can happen in 2 years. And so especially when do people get divorced? Kind of when the kids are getting ready to leave the house and when they're in their mid-40s. That's just kind of when it spikes. And so there's a lot of cases where it's not because they came to us. I just happen to know a lot of people, they're all in their mid-40s. A lot of them are in their mid-40s. And so they're turning around and they are getting divorced. So in 2017, they might have been married, but now in 2019, they're not anymore, or they're separated. So you would use one household's information. And ideally, the one that's the most favorable to you for college purposes, that's a discussion for another day. But today on this video, I just want to let you know that's mistake number 6. So you would not put both households' information, or you would not put, let's say, mom and dad divorced, mom remarries, but we've seen where mom has gone to fill out a form and put mom's information and dad's information. No, it would be either dad's household or mom's household, including new stepdad. Even if he doesn't want to be included, if they're married and we're using that household, unfortunately, he's part of the equation in that scenario. So that's the 6th mistake. Number 7 is there's a different form that I mentioned earlier called a CSS profile. A lot of the private schools require this form. And so this bad boy, if the FAFSA is like filling out a 1040, a CSS profile is like filling out a tax return with all schedules attached and a set of corporate returns and some essay questions thrown in, and what the hell, maybe even that form that my daughter has to fill out. It won't quite take you 38 hours, but it's just a pain. Like, I've done this and made my living doing it for decades, and I hate the profile. Like, we do it, and we do a good job on it. We do a better job than our clients would, but I'm just like, do you really want to go? Let's go. Okay, cool. We got you. That's what you paid me for. I'm like, I hate this form. And that sucker has trick questions. So I'm going to save that for another video. But just know that there's different definitions. There's different things that they ask about. Now, they do ask about home equity. Now, they do ask about retirement plans. There's a slightly different definition of what is a business and what isn't. So just know that's a conversation for another day. But you just have to be aware of that. And you have to be aware that it exists. And if a school requires it and you don't do it, don't fill it out, your file will be considered incomplete and they will not process your file and give you money. And then the last kind of mistake number 8 for the day, is not substituting out your most recent year. Now, see, remember, the strategy that we apply is get your share legitimately as low as possible via planning. Pick schools that have money to give, and we can research that before the fact. The third step is figure out where your share is coming from. So this is all kind of the planning phase. And we do a really intense job with our clients of going through and looking at home equity versus paying as you go versus, trying to slow down retirement or maybe even pillage a retirement account, like pros and cons of everything, so that the client can make the best decision there. Step 4 is filling out the paperwork accurately and on time. And then step 5 is, when appropriate, negotiating with the school. Let me give you a perfect example. So Obama is the guy who came up with the idea that we should go 2 years prior, so you could use filed tax returns. And again, that academically, I'm sure in the room when they had the meeting sounded great, right? Oh, to make everybody's life easier. In the real world, people get divorced, people change jobs, people lose jobs, people move. Like, it's just kind of a hot mess. And so if, say, your 2017 was really good, but 2018 not as good, then once your kid's accepted at the school, you can actually go in and appeal that award letter, or you can appeal it based on medical expenses, separation, better offer from another school. So that's kind of number 8 mistake, is not being aware of that and knowing that you should go talk to schools about special circumstances or changes in your situation. So that's it for today. Number 1 mistake, not filling out at all. Number 2, filing late. Number 3, mislisting your assets. Mislisting, that's a word. We'll go with it. Number 4 is overvaluing a business that maybe shouldn't be valued at all. Number 5 is listing income in the wrong place. Again, these are, all the parents that we deal with are all pretty smart, and it's a messed up form. Number 6 is not accounting for divorce or separation or remarriage. Number 7 is using the exact same information on the CSS profile if it's required, and not realizing that some of those definitions change. And then number 8 is not informing the school of changes to your situation. If 2017 or whatever year we're looking at, the 2 years back, wasn't the same, not explaining that to the school. So if you haven't been to one of my classes, definitely you want to come. We do them on all, we actually have several different classes that we do. We do one on the retirement tax trap. We do one on paying for college without going broke. We do another one on getting into college. We do another one on tax tips. We do another one on mortgages. We do our best to make finance fun and make y'all smart and get you a PhD in money, your money. So if you haven't followed our webpage, please do it, our Facebook page here. If you haven't checked out our website, roncarruthers.com, check it out. Got some videos on there, got some other cool stuff that aren't on Facebook. And then if you have not hit the like button and you've watched this far in the video, shame on you. Hit that like button and feel free to share with your friends, man. We're trying to spread the word. We're trying to help the community. One of the biggest problems in the world right now is student debt. I mean, every blooming day there's an article about how millennials can't buy homes. They're choking under the weight of student debt. The problem is, once you're in that position, that horse has already left that barn. That's a pretty good analogy for a city boy, right? Born and raised downtown Santa Monica. The horse has already left the barn. It's kind of too late then. We want to get this on the front end, and we want to send your kid to the best school for the best major that they can actually get a real world job at, so you're not supporting them. And at the same time, we want you to pay the least amount possible for that and leave your finances in better shape when you finish your last kid going through college than when you started, which is not the way it works with everybody else. So we want that for you. So, and of course, you're welcome to come to our classes. You're also welcome to call us up and ask questions or post questions in the box. We'll do our best to answer them. So we are here for you. If you got a question on this stuff, have your people, call my people, and we'll chat about it. And like I said, definitely please help us spread the word by sharing this, liking this, following us on Facebook, and spreading the love. All right, I got to go get my friend Sid. It's a girl. She's my buddy Glenn's wife, and she does an amazing job cutting my hair. She's like a big shot real estate developer or real estate agent. And anyway, I got a funeral to go to on Friday for somebody in my wife's family, so we need my hair looking extra fly. So my video tomorrow, you'll be able to see my haircut, and we'll go from there. So I'm out for tonight. Let's see, where are my controls on this? Again, if you haven't been to the class, you got to come to the class, and we will go from there. Talk to you guys later. Bye-bye.